Can the retail rally get the market going? Today we'll break it down for you. A lot of bullish news, but also some things to concern yourself with. My name is Paul Barron. Welcome back in the Tech Path. Let's get moving. I do want to thank our sponsor, and that is Tangem. This is where you guys can get into self-custody. If you've never done self-custody, if you're brand new to crypto, well, the way you start is visit Tangem.com. Now, they're going to send you a little credit card-like looking thing, and this works with your phone. It's very easy. You can set up a self-custody wallet with that card, and then every transaction that you do on crypto has to have that card present. Very, very secure, very easy to do. So check out our link down below. It's going to give you some discounts and get started on self-custody. Let's lead off here with, of course, the news of the day, and yesterday was the ceasefire. And this, of course, was Trump posting on Trump Social. This, of course, was his post on X, and or their repost on X. And it's really just saying we've got the ceasefire going. Hopefully this thing is going to start something in a very big way that will be positive for the region. That was the biggest issue. Further into that, you know, Trump on Israel, the ceasefire just now, this is his statement of what's going on, peace, prosperity, all these good things that are coming out of the Middle East now that at least they're talking both sides. So that's the good thing, is that we are seeing movement on both sides. Now, granted, these guys have been at it for quite a while, you know, years, hundreds of years, it feels like. And now you've got, of course, them violating the ceasefire already. It was like 4 hours in. So hopefully Trump has re-established a control position with even Israel and saying, hey, just don't engage. Let's get out of here and get away from this so the markets can go forward. What's interesting to me is that the market did not really respond on this little skirmish that happened after the ceasefire. Maybe those are expected things within a ceasefire, I'm not sure. But here is Trump talking about the issue with Israel. Take a look.
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I've never seen before. The biggest load that we've seen. I'm not happy with Israel. You know, when I say, okay, now you have 12 hours, you don't go out in the first hour and just drop everything you have on them. So I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning because of one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. We basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing. Do you understand that?
Do you want to respond to Iran?
What is Israel at this point? What's the end game? What are they? I'm not sure what Israel needs to accomplish at this point.
I think there's a couple things. They need to look, as long as there are missiles that Iran can send to Israel for Israel's
Right.
perspective of Israel, they're sitting around going, we can't have this.
Hopefully Israel, if you don't see Iran do anything, hopefully Israel is not going to once again just finish whatever it's. I mean, if it's
right, but
I'm saying I wish Israel wouldn't even respond to this.
My problem is if they send the missiles over,
right,
and then they think that they have to retaliate. The question is, can they take out effectively all of these missiles? I don't know how you do that.
So you can see, I mean, it's a little bit of tension. The interesting point, as I mentioned earlier, is that the markets had not really responded negatively. The point is maybe they believe that Trump's ability to get this deal done across the line may be a little rocky in getting it done, but hopefully in the future it is going to happen. Here was Trump even going further into this, and he's talking about now China can continue the purchase of oil from Iran. Remember, they control 90% of oil going to Iran. Hopefully, they'll also be purchasing plenty from the U.S. Also, great armor, make this happen. Point being is maybe there's going to be some trade opportunities here now within the region that really opens it up. Because remember, Iran's still in the top 10 and the U.S. leading the space. So energy is always part of the issue here for sure. Now, let's get into the framework of crypto and why all this is getting ready to be very bullish, because this is going to open up markets now that we can get some of this, you know, war stuff out of the way. And here is Vlad from Robinhood breaking down a little bit more on how retail is responding. Take a look.
Over the weekend, when all of this was happening, the markets didn't move so much in the overnight. Right. I don't know if you guys were surprised by that, but I feel like if this had happened a year or 2 years ago, we would have had a huge move. But markets were flat to even a little bit up. And if we look at retail has pretty much continued to buy the names that they were buying previously.
Right.
So heavy in the AI space with companies like NVIDIA, Tesla, electric vehicles, big in crypto and fintech related companies. So it's very much long innovation. Over the past 4 years, the really interesting high potential things in crypto have all been pushed overseas. So we're actually doing an event next week in the south of France, our first big crypto event, our first big international event. And one of the messages is Europe's actually ahead of the US at this point. So it's rare that America has to catch up in a frontier innovation industry, but here we are. So I think these bills provide much needed clarity for builders to actually bring back a lot of that innovation in the US, make it available in our home market.
All right, so what Vlad was getting into there obviously is maybe the fatigue that retail is looking at when you think about what's happening in the Middle East. But the cool thing is that there are opportunities here going forward, especially around regulation update now around the market structure bill. Zell and Artera talking about just that, is that principles are signed. This again is some of the leaders out there, Senator Tim Scott, Lummis, Haggerty, all of these moving into the market structure, which I think is the next shoe to drop in terms of getting crypto regulatory alignment. It is a big one because it will open up a lot of innovation here in the United States, to Vlad's point, and I do agree with him, big deal coming forward. They are so committed to this, meaning Robinhood, that I think that they have something up their sleeve. I'm expecting some very, very big news, and they even say it right here. Crypto season is nearly here. We've got updates coming, and it all starts soon, and it's going to start, I think, with crypto tokens. This is innovative. Let me know in the comments down below what you guys think Robinhood is up to here on this big announcement they're doing. Now, I want to also go over into other big news, which is what's happening within the banking system, because banks are now seeing a much more relaxed situation with the Fed that starts to open some opportunities up. Look at this clip right here.
That banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Can you imagine that being said by the Fed chair in a Senate hearing about banks opening up in this? What it mainly means is that there's a lot of pressure now because of these innovations that are happening around stablecoin, with the Genius Act being passed, now Circle flying up the chart. I think a lot of people underestimated that, and they're seeing the repercussions of what that means for the banking industry. Other industries that are being disrupted is where we'll get into merchant services and credit card services. Here was Cramer talking to the Visa CEO. Take a look.
Visa took a hit after the Genius Act passed through the Senate last week, would send shivers through the nation's banks and card network giants. Are you shivering?
No, the world didn't change for us at all on that day. We've been embracing and building for years.
Just to continue the Journal's bill of particulars, stablecoins could allow merchants to circumvent traditional payment rails, which could cost them billions of dollars in fees each year, including the interchange fee that they pay when customers make purchases using cards. Again, this is a sense that you are a needless middleman. Could you explain to people why that may not be the case?
Jim, payments, you need three things. You need trust, you need ease of use, and you need scale.
Okay, I just want to be sure what people know where I'm from. This is a show about trying to figure out the investment opportunities, and I think it's ridiculous that your stock fell this much. I need you to know that. And the reason I say that is because every year there seems to be something that's supposed to knock you out. I mean, everyone tries. Why don't they succeed?
What they've done is they've found the value in the Visa stack. You just had Vlad on Squawk before me. Robinhood has a Visa card. And that'll be true with stable coins as well.
But I do wonder, Ryan, if Walmart and or Amazon were to create their own stable coins, their enormous market that they control, would that not be a threat to you in some way?
But you already have the ability to pay with digital dollars on both of those sites today.
All right, so Visa CEO kind of struggling with a little bit there, but I do disagree with Cramer. I think that the reason that we haven't seen disruption of this is very simple. we did not have regulatory alignment. And now that is done. What we will now start to see is where retail merchants start to find that there are savings. And once that starts to chip away at the Visa and MasterCard network, then you're going to get into the credit services, which eventually will be done by a lot of these neobanks, Robinhood being one of them. So there are big things to be watching around this. MasterCard also joined GSD right there, which is part of and will be integrated into Robinhood. But the point being is that we're going to see stablecoin usage across these networks. But at some point, retail is going to figure this out and say we don't need to pay those merchant fees. And that's going to save the consumer money. It's going to save the retailer money. And in some cases, they may actually be rewarded for utilizing stablecoins. That's when it gets crazy for Visa. So I expect Visa and MasterCard to continue to see a lot of pressure coming forward on their stock price. President Trump, of course, is issued an executive order to stop banks from cutting off crypto firms. This only lines things up even more for crypto firms to create more fintech products coming into the finance system. This is going to put a lot of pressure on many industries out there, and it's just beginning because we finally have an administration that is allowing this innovation to happen here in the U.S. I want to go into another one because this is where the institutions are now getting into a frenzy just to get involved in this because they see the writing on the wall. Take a look.
I feel like the volatility is going to decrease for sure as the Bitcoin prices continues to increase. Of course, it's a supply-demand platform, but at the end of the day, somebody getting into the market now from a very retail perspective, it is still better than having bonds or having 5% treasury yields.
And where is there still room to run higher, given that it has moved so much higher in such a short time on expectations from the incoming administration?
I feel like now everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it. I need to understand it. I need to own it. I need to provide it as a private wealth service to our clients. So it is just the whole run of things.
I wonder if institutional is too late on this. And hear me out on this, because if you look at the monthly share of individuals below the age of 40 now that are transferring funds into investments, it's more than tripled over the past decade. Now, my expectation is because of the opportunity. Remember that on that clip right there, they were asking, well, where would you put your money if you're not interested in getting these 5% yields from some of these bonds and money markets? Well, the opportunity is in all of these new fintech products, different kinds of investing instruments, what we'll see in the DeFi space, which I think is going to absolutely explode once market structure gets in play. That is going to put pressure on the institutional capital, because what they're going to see, and maybe what we're seeing right now, is retail actually outpacing the growth because this sector is so innovative. And being able to keep up with that, well, Wall Street has a little bit of a problem. So you look at retail investors, they're going crazy. Penny stocks, proxy for retail activity right now, accounted for 47% of the market volume on Thursday, all right? This is an all-time high. So you already see the meme scenarios playing into this. We saw this within the crypto space, and that was pre-Trump, us seeing the real explosion of regulatory alignment. This changes everything, and I think this is what you got to keep your eye on, is this next generation of investors. They're much faster. They follow crowds and memes very quickly, and they look for innovation inside the product, and they move at lightning speed, where institution does not. So yes, institutional capital will deploy into Bitcoin, Ethereum, maybe some of the top 10, 20 tokens, but most of those are going to be more stable, especially as the market gets more active within crypto. Polymarket nearing you think about the trends I'm talking about, look at Polymarket. Nearing they have now neared a $200 million raise with a $1 billion valuation, highly undervalued in my opinion. However, distribution is going to be big. And one of the things when you consider distribution is one of their competitors. Vlad is talking about his partnership with that competitor. Take a look.
Our offering. So we launched prediction markets last fall with the presidential election. And then more recently, we've been expanding. We do all sorts of economic indicators, inflation, CPI, gas prices, and sports. And that's been in partnership with Kalshi. So I think our role in this market is retail distribution. We've got close to 26 million customer accounts just in the U.S. that are interested in this stuff and are in the target demographic. So I think distribution is going to be very important. Exchange infrastructure is obviously important to make the market happen as well.
There you go, distribution. He said it. That's exactly the point I'm getting at, is he who holds the keys to the retail investors, especially in a lot of these predictive markets, are going to be the winner. Now, granted, Polymarket has grown because of its viral element that happened during the election. The question is, can they hold it? Can they stay in the lead position, especially with Robinhood starting to get much more active in crypto? So be on the lookout for that. On other news, Fed Chair, of course, his testimony was today. He's positioned to wait and see on rate cuts. No surprise. Tariffs likely to push up inflation. Unlikely. Immediate signal of interest rate cuts were provided, and the labor market conditions have remained solid. All right, so he's basically saying we're not losing jobs. We see that inflation still might be a thing, and we're not ready to cut. So that's pretty much the message that Chair Powell is saying. Of course, he's saying to them quite a bit different. If you look at the potential of the odds, interest rate cut by September now have soared to almost 80%. So does it look like September is going to be the case? Let me know what you guys think. I actually think that we may get an earlier one. And if you look at the reasons why, there's a couple of points within this. When you think about where the potential is right now around the markets and also just the pressure that we're seeing, the opportunity, I think, here is going to really center around jobs, and especially if interest rates, or inflation does not really stabilize and go up. And I think that's the point that everybody's getting at. And even Tom Lee was saying this the other day, is that if you look at all these other sectors, energy, housing, those kind of things, we're down and continue to be down. And that, I think, is the big one. On this tweet right here, it basically says CPI data quality is deteriorating. I think everybody knows that. If you follow Trueflation, I'll show you this in a second. They use hundreds of field collectors. These are people that are collecting this data in 75 different areas nationwide. However, when this data is not up to par or available, what do? They guess. They guess at it. So that's the point of the issue right now, is that most of the time they are so far behind, either far behind in cutting rates or far behind in raising rates. That's the point that has been the issue all along. If you just follow what's going on with Trueflation, this is, of course, where we need to be. And if you look at where we are right now, 2.14, that is the target zone. And it has been in the target zone, really, if you go all the way back into September of last year, guys. Yes, it went up during the election, but it did not crack really much over 3%. And that's the point I'm getting at, is this data is flawed, and the Fed needs to do what they have to do, and that is stimulate the economy at the right time. The right time is now. All right, one other thing right here is with the ETH ETF. This is good news, and this is more ETH pouring in. Could this be kind of like what we saw back here around June 8th, where we saw that skyrocket into ETH ETFs? Maybe ETH is getting its lifeblood again. We'll keep a close eye on that and give you guys some updates. Everybody else is pouring into ETH. More whales and institutions buying more ETH, all in the idea of treasuries being stocked with ETH now. So a lot of opportunities there. And speaking of treasuries stocking in on ETH, SharpLink Gaming says they're going in and grabbing another increased up their holdings to 188,478, which is required at an average price of around 25. So that is another issue, because if you compare this in the early stages of MicroStrategy, many people question whether or not MicroStrategy could actually, make this work. Same kind of thing happening with companies like SharpLink Gaming. If you follow the ETH chart, nice move over the last couple of days. Let's go down from that dip on the bad news over the weekend to where it could have been if you wicked out. Almost a 17% move for Ethereum. Let me know in the comments if you guys think ETH is still going to outperform Bitcoin in this bull run. And if you're not in the Diamond Circle, get in on that. It's a great place to get additional content. Follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.